What's up everyone, it's Kadi with MoneyVest. So in this video, we are going to be talking about Enphase stock, and Enphase is going to be reporting earnings next week on Tuesday, July 23rd, after the markets close. So it is a big day for Enphase, and I believe there is a possibility that if I do see certain metrics getting hit, and of course we'll listen in on the earnings call as well, there is a possibility that the worst may already be behind us. So that's exactly what we're going to discuss in this video. I'll break down the earnings expectations, the revenue expectations, and of course the entire business and how it's progressed over the last 8, 12, 16 quarters and why we are here at low $100 and what it's going to take to get back to potentially new all-time highs. So hope you all enjoyed this video and find it helpful. Make sure that you drop a like. I would really appreciate that. And of course, subscribe to the channel if you haven't already. Join our MoneyVest community if you want to get access to our Discord, all the trade alerts, all the trade ideas, options alerts, as well as access to our MoneyVest platform. We launched 2 weeks ago and the feedback and the reviews have been absolutely incredible. We're going to be adding more features and more tools over time as promised. And we're going to be using this to analyze Enphase today, which trades at a 3.77 M-score out of 5, which again is a pretty solid M-score overall as the valuations have come down and the growth rate's been pretty strong. However, the last 4 quarters, we've obviously seen the growth rates also come down to Enphase now generating, unfortunately, a loss. We'll discuss all of that. So first things first, let's talk about some of the investor presentation items and to give you a bit of an update and overview. Founded in 2006 with 2,846 employees as of March 31st, 2024, as of the last quarter here, more than 4 million systems in over 150 countries. And they are again, leading energy technology company in the world, focusing on renewable energy, microinverters, and of course, they've got their own application, which makes their models, which makes their technology more predictable and more user-friendly and efficient. I've met with a lot of people that have installed solar panels and are using the infrastructure provided by Enphase, and they have mentioned it to me that their technology is way above and beyond compared to some of the competitors out there. So based out of California, customers are distributors, installers, and homeowners. 1,750 installers in the Enphase installer network, EIN, as of March 31st, 2024. Cash flows and net income wise, we'll talk about that in just a minute, but approximately 75 million microinverters shipped, representing approximately 25.85 gigawatt hours for the company. Moving forward, this is the core differentiator, semiconductor integration and predictive control. And that is one of the things that I've mentioned in one of my other videos for Enphase when I was comparing it with Tesla's energy grid. And so that it is very predictive in a sense that it uses a lot of intelligence to be more efficient in a way that it can stop or resume the energy efficiency for certain areas of your home. And that can be controlled via the application as well. So software-defined architecture and Ensemble energy management technology is what they also operate off of. Now coming over to the power semiconductors, software and Ensemble technology, high quality, higher efficiency IoT systems, exceptional value, higher efficiency IoT system, low cost, safety. I do believe that in terms of the energy efficiency, Tesla's great and some of the other options out on the market were better utilized. But in terms of the quality and the technology that it offers and the efficiency, there is no comparison to what Enphase offers with their microinverters. Resilient business model. Now this is actually quite interesting because they do have a low capex versus very high OpEx efficiency. So they do have, let's say, more installers and employees working for the company, but they don't really have any big factories that require a lot of capital expenditure. So their headcount, 34% based out of North America, but majority of their operations are out of India. So 53% of their headcount is based out of India. In fact, in Noida, where I live, in the same town as me, they've got offices, and of course in other parts of India as well. Now moving forward, their strategy is to build best-in-class home energy systems and to deliver them to homeowners through our installer and distributor partners, enabled by a comprehensive installer program. And again, IQ microinverters, Enphase Cloud, Enphase app, IQ combiner, EV chargers, utility meter, system controller to batteries, everything is what their plan is, or this is the entire ecosystem that they're looking to provide. Now, coming over to the numbers, let's just jump over to our MoneyVest platform. Now, a couple of reasons why I believe that Enphase has not really done well in the last 6 to 8 quarters is basically dependent on the inventory buildup the softening of demand with regards to the renewable energy ecosystem. The adoption rate has fallen off a little bit because of higher interest rates and how expensive it is to really reprogram your entire home from the energy grid over to renewable energy by installing solar panels. So because of that reason, there's been very difficult sell-through rates across all of their installers and their third-party vendors. And as a result, the inventory buildup has been very, very high. This is last 8 quarters. If you go back to last 16 quarters, you can see how significant that inventory is built up on Enphase's balance sheet. So they haven't really been able to sell a whole lot, I would say, since the end of 2022, beginning of 2023. They've only seen that inventory buildup accelerate to the upside. And if you come over to the Enphase stock price, you'll notice that, if I remove for everything, the sell-off essentially began towards the end of 2022, beginning of 2023. That's when markets started to pick up on that quarterly forecast that the demand is weakening. It's softening in this entire environment because interest rates are going higher and inventory buildup was pretty obvious that it's going to have a difficult time sell through. And then if you come over to the company's actual numbers with regards to profitability, that's also when we started to see gross profit come down and the net income also turned into net losses as of the most recent quarter. As you can see that it was coming down and then eventually turned into a net loss as of the most recent quarter. Now, when it comes to earnings expectation, the market is expecting for Enphase to report a profit, so earnings per share of almost 50 cents per share, with revenues of just over $310 million in the most upcoming recent quarter, which is going to be reported next week. And $310 million compared to same time last year for the June quarter, when they reported $725 million, of course, is going to be over a 50% decline on a year-over-year basis. And earnings per share was $1.47 versus 50 cents per share. So that's over a 60%, 70% decline on a year-over-year basis for earnings. So earnings and revenue-wise, there's no doubt that they're expected to decline on both on a year-over-year basis. But I do believe that the worst is kind of behind us, as we know that interest rates are potentially going to get cut down moving forward. So that's a huge tailwind for Enphase moving forward. Not just for Enphase, but a lot of stocks in the renewable energy space, as well as, of course, Tesla benefiting from lower interest rates, because a lot of the households are going to think twice before financing a solar panel and renewable energy kind of micro inverters because of how expensive they are. But at lower interest rates, it's going to make that decision a lot easier for households. And so inventories are going to start coming down. The company is going to be sort of backed up on all the orders, and they're going to have a lot of demand coming in at lower interest rates. So there's definitely a macro component involved with Enphase Energy Systems. They do have pricing power. They do have, in my opinion, very strong technological advancement over their competition. So that's the moat. But yes, the macro environment is not super favorable for this company at this moment. Now, if you come over to the annual data, so if you come over to the last, let's say 10 years, and we plot for total revenues, we plot for gross profit, operating income, and net income, you'll notice that the company did turn the corner in 2019, of course, started becoming profitable. However, last couple of years, it's been a little bit more flat. We did see some growth, but not as significant. So gross profit went up to over $1 billion, up from $974 million. So still decent growth, but not as high as what Wall Street was expecting. And as a result, we did see, of course, declines in the stock price because of that lower growth rate. I remember doing a couple of videos on Enphase at the time when year over year, the company still grew, and yet the stock price was continuing to get hammered because of the lower quarter over quarter numbers, right? So we continue to kind of progress downward on a quarterly basis. Coming over to the balance sheet. So let's go back to the quarterly numbers. And let's look at the last 8 quarters. Total cash, the company's sitting on about $1.6 billion versus long-term debt sitting at $1.19 billion. So the company still has a pretty decent cash position, and net debt is negative. So that's exactly what we want to see. And then if you come over to ratios, of course, valuation has come down. However, since 2024 is expected to be a year where they may decline in earnings per share, the earnings per share, in fact, if you come over to analyst estimates, just one quick second, on an annual basis at $2.89 is the entire earnings expectation for 2024. So that's going to be a 5.5% decline for the company, and that's going to be trading us at around 36 times the forward earnings multiple. I just want to make sure the math is right. So we're looking at $105 in stock price, 105 divided by $3, actually $2.89. Yep, so 36.3 is the earnings multiple on a forward basis for the company. But then it's expected to accelerate back higher post 2024. So we do have a buy rating on Wall Street with a $174 price target. That's almost a 70% increase from where we are at the moment. A low price target of $46. That's going to be over a 50% potential decline, and an average target of $129 with a growth rate expected in the 20s, right? So 20-25% is what the market's forecasting for the next 5 to 7 years. And the last 5 to 7 years, of course, the company's also done a very nice 20 to as much as 30% growth rate in net income. In fact, we don't have net income because the company was not profitable. But for 5 years, we do have operating cash flow increasing at 112%, operating income increasing by 140%. So we don't have 5 year either. Let's look at 3 years. Net income has grown at 48.5% over the last 3 years. Earnings per share up by 48% over the last 3 years. And shares outstanding. So last 5 year shares outstanding, not very good. 7.5% increase in shares outstanding. So that's a lot of dilution, which the company has been buying back shares now. So if you come over to fundamental analysis, last 8 quarters, cash flows, and if I scroll down under cash flow from financing activities, common stock issued or repurchased, you'll notice that it was positive, but the last 4 quarters, it is negative, meaning the company is actually putting up cash to buy back their own stock because they believe that it could be undervalued or it could be a good time to buy back shares because of the abundance of free cash flow and also the stock price trading at very, very cheap levels. So they have been over the last 4 quarters, or in other words, 1 year, they have bought back quite a bit of shares, right? So almost 200 million, 109 million, 87 million, 40 million. So every quarter they are spending on average about 50 million in buybacks. So keeping all those things in mind, if you come over to Analyzer and discounted earnings model, and let's say that we forecast for 5 years, and we know that this year there's going to be a bit of a decline in Enphase earnings. It's going to come down by 5, maybe 6% to down to $2.89. But eventually, we know that 2025, there could be a bit of a rebound in the overall demand. And given the cyclical nature of these types of businesses, given that there's also a tailwind related to interest rates, let's forecast for not 25%, but just 20% growth over the next 5 years. That's where I expect that it's going to average itself out. Yes, this year is going to be a bit of a decline, but the following year, the expectations are high for well over 30-40%. Let's say that it doesn't do that much, increases by 20% on average. PE multiple, right now trading at around 36, 37. Let's come down to about 25 for a PE multiple. And share dilution, let's come down to nothing, 0%. No buybacks, but no dilution either. 12% discount rate, 10% margin of safety. If you hit calculate, this number may be a little bit lower than where it's trading at the moment, slightly lower. So we're looking at 2.8% overvalued. So we're looking at an estimated intrinsic value of about $102, and it's trading at about $105. So if you believe that Enphase can grow by 20% over the next 5 years after going through a bit of a decline in 2024 and post 2024, starting 2025, there can be a bit of a rebound and some acceleration in the adoption and execution on the company's part with a huge tailwind around interest rates and giving them a very reasonable 25 times multiple, which is actually going to be a bit of a compression from 36, then Enphase is most likely trading at its intrinsic value at $102. If you feel that there is a lower P multiple and somewhat lower growth rate that needs to be applied, let's say 18% growth rate and a 23 times P multiple, then your intrinsic value ends up at around $86, which is going to be significantly lower than where it's trading at the moment, most likely about a 15% decline needed in order for Enphase to come down to $86. But I think it was trading at those levels not too long ago. It was in fact trading as low as $71 back in November of last year. So it has seen a little bit of that recovery, but for the most part, it's really consolidating sideways in a range. So if I were to put down a very reasonable range within which it's trading, so this right here would be that support at around $90 to $93 and a resistance at 138. So it's got a pretty nice 40 to 50% range within which it's just been trading. So if I remove for everything here, it should make a lot more clear sense of how Enphase stock price has been doing. So this right here is that it goes up, comes down, goes up, comes down, goes up, comes down. It's really just been trading in this range of resistance at 140s and support of 90s. So the moment it breaks out above this resistance in the 140s, I have it on very high account that the price target is going to be closer to $200 in my opinion. So this is based on my analysis. The future price target is going to be close to $200 over 5 years, and that's an estimated total return of potentially over 95% for Enphase, given a very conservative estimates for growth rate and a P multiple fair value sitting in the low 100s for Enphase. But let me know your thoughts down in the comment section below. And from a technical standpoint, it's really just been trading sideways. So if it does end up, let's say, selling off post earnings, it's most likely going to be on a miss And again, the future guidance not being as strong as what investors or analysts are expecting, and it could easily drop down to low 90s again. That's going to be a 10 to 11% sell-off. But of course, if you do get any type of optimism around the future, 2025, after 2024 is over, then yes, there is a possibility that it does trade back up to potentially retest highs of 140. That's been a triple top resistance for Enphase and an area where it's not been able to break out of for a very long time. So that's going to be the level to keep in mind for Enphase. Support level is going to stay put at $93, $94. A lot of consolidation in that range. Fair value right now based on these estimates ends up at around $102.49. Let me know your thoughts down in the comment section below. Also, do check out the MoneyVest platform if you want to calculate a lot of the values yourself, play around with the numbers, and of course visualize a lot of the data so that you can do full comprehensive fundamental analysis on individual stocks. We're going to be adding ETFs over time as well as portfolio tracking, as well as our macro dashboard with the MoneyVest index as well. So all the trade alerts, trade ideas also included, 51% discount available until the end of this month. And as always, happy investing. I'll see you all in the next video.